Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and I am recording this on Super Bowl Sunday before the big game. Obviously, you know who I'm rooting for. So go Birds. Anyway, just before we get started, I need to remind you that we are not registered broker dealers or investment advisors. We're taking a look at this information from an educational standpoint only, not telling an advisor or holding particular securities or giving any personalized recommendations in the markets. There's always risk in the markets. No matter what we do, we can never eliminate it. We just try to minimize the risk, manage the risk, and past performance is no indication of future results. We're also not subject to trading restrictions, so we can have a position in security and initiate one at any time. Keep in touch with me, please. Love to hear back from you. You can give me feedback, give me suggestions, give me some information about what you like to look at. You can always hit me up at brandonwendell.cmt@gmail.com. You can also hit me up at TraderBDub on Twitter, and I post there quite a bit to keep you informed of what's going on in the markets, what's going on with me. And you can also obviously find us on YouTube. Please make sure you subscribe and hit like for the videos. That way I can provide you with more information in the future and keep these videos coming for you. So I appreciate that, and I'll talk to you soon, hopefully. So for today's schedule, we got a really fun show. We're going to start off first with our typical futures market analysis on the equity index futures. Then we're going to shift on over to the energy futures, but then we're going to take a little break, and I got a special guest with me today. I recorded a little visit from a friend of mine. I've known him for close to 25 years, I think, maybe even a little bit longer. So it'll be a lot of fun. We're going to talk about the market. So I'm not going to tease you yet. You probably already know who it is. Anyway, it's Merlin Rothfeld. He's going to be on with me. Like I said, great trader, great friend, known him for a long, long time. Really interesting stuff that he comes on and talks to me about. So we'll get into that after the energy futures. And then we're going to pull back and look at these sectors for the stock market, get an idea of what might be coming up for the next week or so. So we're going to kick this off for the week of February 12th with the weekly market analysis for equity index futures. And looking at the S&P for the next month almost, you can see that the S&P is slightly bearish typically. It looks much worse on the chart than it really is. We just had a couple of really big exceptions in 09 and 2020 where the markets dropped in February. Normally it's kind of flat. So we'll see if that's going to continue to be the case right now as the markets may continue to go a bit choppy and sideways. Looking at the chart itself, you can see we're pulling back off the recent highs that we made. And when we made that high, technically it's not a high because we haven't made the lower low afterwards. Okay, so we could go higher, but we are failing to get above 60 on the RSI, which shows us that momentum is extremely weak. If we're going to make new highs, typically we should break above 60. And you can see since 2022 started, we have not been above 60 on the weekly chart. Well, we've been very, very bearish. We are in a bullish trend now, higher low, followed by higher highs, but it's a very weak bullish trend. We only made it to the first extension, 0.618, and have already stalled. So we're in a retracement now from the highs. Not sure where it's going to retrace to. It could go a little bit, could go a lot. We don't know yet. So as of right now, we're a little bit more bearish, and you can see on the daily chart retreating from the highs. There's not really any demand anywhere nearby. So, this was tested, and I guess really the origin of the previous rally that started off this year is where we could go to, or possibly even beyond if we keep going down. So as of right now, we're losing bullish momentum. We're not bearish, we're definitely bullish still, but very, very weak in that bullish trend. So going down to the 4-hour chart, you can see we've recently bounced off a little demand, but we did go into bearish territory when we did that. So usually if you're below 40 when you try to rally, it's very difficult to make new highs. Now we've done it before. Here we were below 40 on that drop, and we did make a slightly new high, but then we pulled back pretty deep. So we'll see if we're able to do that again, if the bullish momentum continues, or if we're going to be pulled back and maybe shift into a bearish trend. Overall, it looks as though we may just go a bit sideways for the next month or so, to be honest with you. Now, the S&P is not the leading index. We talked about this before. From our lows back in December of last year, the NASDAQ was our leader, followed by the Russell, and then comes the S&P. So the NASDAQ was telling us how far we were going to go to the upside and where we were going to start pulling back down. As you can see, when we started making lower highs and lower lows, everything started going sideways and a bit bearish. So looking at the NASDAQ is actually normally somewhat bullish. You can see from the 12th of February to the 8th of March over the last 15 years, 60% of the time we were bullish, although recently we were somewhat bearish for 2021 and 22. So we'll see if that continues. Going into the chart itself, on the weekly chart, we are stalling out a little bit deeper in this weekly supply. We barely tested it, fell down. We went deeper, almost broke it, and are now falling down yet again. So looking at last week, once more, we had a failure to get above 60 on the RSI, so that's definitely an issue. And this looks like a bearish harami, which could lead to a move to the downside, possibly even fresh lows. We'll just have to watch and see. So overall, the leading market to the upside has now found weakness, and it looks like things are shifting. We may become more bearish. On the daily chart, we do have a daily demand. I didn't mark it off right here, but right around 12,100. You see we have drop, base, rally right there. So we're not quite there yet. Still very, very bullish, but losing momentum. But again, I would watch this. If this does not hold as demand, then we may be seeing some new lows for the year. So just keep an eye out for that. On the 4-hour chart, things are looking a lot more bearish. We tried to make highs and get into bullish territory. We're getting weaker and weaker on each rally. Now we are below 40 for the first time since mid-January, it looks like. So we are seeing more bearish momentum. As we come down to this demand at 12,100, if we are below 40, as we approach that zone, we're likely to break it. We have enough bearish momentum to go down at least to the 11,400 area. If we are above 40 on the RSI, on the 4-hour chart, when we hit that demand, then we're likely to bounce. So that's kind of the big cutoff there. We'll have to watch for that this week. Looking at the Dow just looks sideways. You see the consolidation on the weekly chart. We're losing momentum altogether, and lower highs, higher lows. It's just garbage. We're going sideways, choppy. On the historical patterns here, you can see that it is slightly bullish. 66% of the time we get a little bit of a bullish move, but overall the average return was very weak when you consider there were two big drops in 2020 and 2009. So, I wouldn't look too much into it. I say we're more sideways than bearish. And again, you see it here on the daily chart, that consolidation that's going on, lack of momentum in either direction. Dropping down to the 4-hour chart, you can really encase all the price action in that sideways channel. We don't look like we're going to break out of it on either side. So we could see a lot of volatility, but just backwards, up and down, up and down, up and down. Great for day trading, great for short-term trading, not so much fun for investors waiting to get good returns. So be patient and be careful. Looking at the Russell, you can see on the Russell, we actually did make higher lows, higher high. And unfortunately, we couldn't really become very bullish and break through our supply. So weekly supply here on the continuous contract, that could have been a retest, honestly, of a prior area here. But either way, it's holding. And we are seeing weakness coming in, getting ready to push us back down. On the daily chart, same thing. We did have more momentum as we were making new highs, which is good. Just not sure if it's going to be able to continue. Again, the NASDAQ's really kind of fueling which way we're directing, which way the markets go. So if we don't get that bullishness out of the NASDAQ, the Russell's just going to follow. And all the way down to the 4-hour, we've already retraced very deeply for our last impulse. We've retraced, almost 2/3, 61.8%, and we're definitely in bearish territory here. So if we rally, there may become a little supply shorting opportunity right here at about 1960. You see, we got that rally, base, and drop as a possible entry. And then we got plenty of targets, 1850, 1803, 1769 on the downside. So that's what we got on the equity markets. We're going to go ahead and shift over to the energy markets and see what we got going on there. So we'll start off on the energy markets with crude oil, and looking at crude oil, the seasonality of it for over the last 17, oh no, I'm sorry, that's only showing 1 year actually, but you can take a look back. Overall, somewhat bullish. And I'm not sure why I flipped over on that, but you can see over the last 15 years or so, it has been somewhat bullish, not great, but average return, well, that's, again, only showing the last year, so I got to adjust for that. Hang on, let me just check the right one. Okay, there we go. Now I got to fix. So we're looking at the last 15 years historical patterns here for crude oil, and looking at that, you can see that we do have actually 66.67% bullish, and with the average return about 5.5%. So we should see a move to the upside historically and seasonally, but that doesn't necessarily mean we will. So looking back at the slides here, And looking at the chart of crude oil, more importantly on the weekly, we're kind of stuck sideways. We've been stuck sideways a little bit on the bearish side here with momentum, but just stuck sideways, really channeling between, that was about 82 to 72, a $10 range. Again, good for trading, not so good for investing. So looking at the daily chart, you can see that sideways range, just back and forth and back and forth, and we're on our way up to the upper part of the range, but we need to have a lot of momentum to get through that 83 to 86 area of supply. You can see that we couldn't quite get too far above 60 and we fell down again. So overall, if we don't get, I would say, I don't know, about 70 or 80 on the RSI, showing us a lot of bullish momentum, then we're going to fail and move back down again. Looking at the 4-hour chart, you can see we do have a lot of bullishness. We did make a new high, and we did make a slightly new high on the momentum as well. So if we pull back, it's likely to be just a correction to the 78 level before we shoot up towards 82. Really more like 81.60 as you see there. So short-term long going on, and it's backed by the seasonal move. But since we're stuck in that range, that channel, you probably want to get out there and maybe look for a short again. Moving on into nat gas, again, going back in history, 46% of the time we were a little bit bearish. I'm sorry, we're bullish 46% of the time. We were bearish a majority of the time. So the average return, again, a little bit weak there as well. Looking at nat gas, not much of a surprise. We're in this huge downtrend that's been going on for weeks or months even. And it doesn't look like it's going to end. We are getting close to a target of 2.217, the 1.618 extension to the downside. But, we're getting our first green candle on a weekly basis since back here in November, I guess, early December. So could we be slowing down? Possibly. Are we changing direction and becoming bullish? Not likely. Going down to the daily chart again, you see the weakness in that downtrend where we got green, 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 green popping in, and the momentum is changing. Look at that, moving back up. So we've lost bearish momentum. So it looks as though we may be bottoming out and at least slowing down our downward move, probably just going sideways for a bit. 4-hour chart, we're testing an area of supply at 2.596 to 2.657. However, we don't really have enough momentum to break through. You can see that the bottom was put in with a little bit of positive divergence where prices made a lower low, but the indicator made the higher low, telling us we were getting ready to pop back up. However, unless we can go a much higher than we are right now in momentum, getting way above 60, we're going to end up bouncing off that supply and maybe just going sideways for the next week or so between the 2.6 and 2.4 range. Moving on to gasoline on the weekly chart, you see we recovered quite a bit after we had turned to the downside, but overall we're just sideways again in trend. So we bounced off the 61.8% correction of the impulse. Overall, historically, this is a bullish time for unleaded gasoline. You can see that the 12th of February to March 5th, last 15 years has been a bullish run, 73% of the time, with about 4 1/3% to the upside for the return. So it looks like we could continue to push up. I don't know if we're going to break out of these highs. Probably just continue to go a little bit to the upside. We'll see. Looking at the daily chart, we're being slowed down a little bit by this supply. You can see when we made the low and hit demand, we were not below 40. So that was a bullish sign. We didn't have enough bearish momentum to break through to the downside. Now we don't have enough bullish momentum to break out to the upside. So we could eventually pull back a little bit and just go sideways here between 2.5 basically, or actually 2.56 to 2.7. That's kind of what I'm seeing right here. There's a little bit of choppiness and sideways movement. Going down to the 4-hour, again, we're pushing up, but looking like we're going to fall back as we don't have enough momentum really to get through this overhead supply. So I expect this to pull back maybe to 2.63 before we rally yet again. Moving on to heating oil, this has also been somewhat of a bullish time for heating oil. You see 66% of the time we get a pretty good pop. Really, it's toward the end of February, beginning of March, really, that first week of March where we get the biggest move. Although that's only showing the last 3 years, unfortunately. But we just made a brand new low, and you could see when we made that low on heating oil, we did not make a low in momentum. So we had a positive divergence suggesting that the green that we see here is going to continue to push higher. We should continue to move up. Going into the daily chart, though, you see we have overhead supply, so we're not going to go up very fast or very far. Right now, we pinged off of the 2.9150 supply right there on the April contract and pulled back. We should push a little bit higher, probably into the 3 area, and then pull back again before eventually settling maybe about 3.08, the next supply zone by the end of the week. But it's going to be very tough to go up. It's going to be choppy, kind of up, pull back, up, pull back, up. Looking at the 4-hour chart, we're not really seeing much else. I mean, the fact that we couldn't get above 60 very well, that suggests we might actually push downwards. So if we end up losing momentum, you can see we're trying to put in a high here, but look how weak that high is. And without more momentum, we could actually collapse. Now, I was talking about rallying, pullback, but unfortunately, this almost looks like we could just push down to the 2.5 level. Right there, that 2.5162, because we're failing to make a new high right here. Well, if we make lower high and eventually a lower low, then you would expect us to continue down to the 2.51. So basically, early this week, coming up on Sunday and Monday, if we end up breaking to the upside above this high, which is about 2.89, then I would expect us to rally up towards 3 this week. However, if first we go down and break these lows right here, then I would expect us to continue down to about the 2.51. So keep an eye, see which way we break. Well, I'm going to go now and bring up the video. I had Merlin I contacted him. We got together, and basically we had this really good discussion. I'm going to go ahead and play that for you now. So if you got any questions, obviously you can go ahead and email me, brandonwendell.cmt@gmail.com, and I can forward them to Merlin as well. I'll also put in a link for his video. He does a daily workshop online that you can watch absolutely free, Trader Merlin. So I'll shut up now, and here's Merlin. I'd like to welcome my guest and friend. I guess I can call you that, right? Merlin Rothfeld. Okay, I can. Good. Welcome, Merlin. Thanks for being on the show.
Pleasure. Thanks for having me, Brandon.
It's a little bit unusual because normally I go on your show rather than you go on my show. If you're not familiar with Merlin, Merlin runs the Trader Merlin Show. Is that what it's called?
Trader Merlin, Monday through Friday at 2 p.m. Eastern or Pacific time every day.
2 p.m. Pacific, 5 p.m. Eastern. And yeah, so lots of good information there. Anyway, before we get into that, but let's talk a little bit about you. And I mean, I met you, about 25 years ago, I think it was?
Yeah, 1998. Yeah.
Yeah. So you were a trader in California. And well, first of all, obviously we're talking about trading. How'd you get involved in this altogether?
So at the time I wouldn't say I was a real trader. I was more an investor. So I got a finance degree and I was working for a financial planning company back in 1996. And I was taught, the buy and hold methodology, all that long-term stuff. And I realized it really didn't align with my temperament. I'm a very fast-paced person. I need reaction or results right away. And long-term investing wasn't it for me. So in spring break of 1998, a friend of mine sent me an article on day trading. And I was like, what the hell is this stuff? So I went down, took some classes in Southern California at Online Trading Academy. And, the rest is kind of history. I took one class and then started teaching and then became a trader on the floor. And then I've gone on to teach at university in Italy. I've taught for banks, brokerages, trade shows. And now I just build financial education and trade just every single day in all asset classes. I trade stocks, options, futures, Forex, cryptocurrencies. I'm addicted, and I've been addicted for, call it 27 years.
It's a lot to juggle. I mean, you said you're trading pretty much all the different asset classes. Is there one that really kind of stands out that you prefer to trade, or is just you look for opportunities?
I think it all depends on what your goal and objective is. So, right now, I would say my preferred asset class is options, and not in the way that most people would like it. I think I don't look for the big grand slam hits anymore. I'd rather hit singles all day long. And I've been selling options, and I have two specific options accounts. One's a hybrid, and then I have two that are just nothing but selling puts or covered calls. So that is probably my preferred because it's the least stressful. It's just saying I'm selling ice cubes on a hot sunny day. Those ice cubes are just going to keep melting. And you know what? I might lose a little bit on some of them, but I'm going to continue to make lots of little profits. So I think for me personally, I love the selling of options. It's a little less hands-on, but I also do love day trading. So I like day trading futures. I like trading equities, and cryptocurrencies is a long-term hold for me.
Okay. So when it comes to the selling the options, you're still doing that more of a swing trade, or are you doing that as a day trade?
So it depends on the account. No, not day trade. I don't usually do 0 day to expiration like you do, although that's something I am interested in. I do have one account that I dabble in it a little bit, but I'll do weeklies, not necessarily dailies. That at this point, weeklies kind of the shortest time frame I go. But I really prefer the monthly. I have one strategy I do. I call it the 1% strategy, and basically I'm just selling puts, and I'm looking for a 1% rate of return per month at a minimum, and I'm looking between 1 and 3 is what I want to get. Last year we're getting around 3%, so awesome. I'll take a 36% rate of return for a year, and when the market's down 30% or 20%. So, different strokes, different strategies for different marketplaces, but I like to trade all of it. And there's no real, this is my favorite. It's just what's working the best is usually what I go with at that moment in time.
Okay. Well, you obviously got a lot of experience. You tried a lot of different things. Is there anything in particular that you look back and you're like, man, I wish I hadn't done this? It's something you learned from, hopefully. Is there anything in particular that comes to mind?
That I wish I hadn't done?
Yeah.
I mean, look, and I think you would probably agree with this one as well. If I go back to those days when I knew you on that trading floor in Southern California, I would say that my own obstacle or my biggest enemy was me. And it was me just doing dumb stuff, doing things that my mentors, my coaches, my friends were saying, don't do that. And you're like, I'm smarter than you. Shut up. I'll do it. I'll do whatever I want. It's my money. And you're like, oh, why the hell did I do that? And you're taught through the years that you are associated with good traders, not scumbags like Mr. Chicago trader who thinks he's the greatest thing ever. But you're taught by good traders that it's all about discipline and risk management. And I would say that I threw caution to the wind early on. I was just too arrogant and cocky and thought I could make a ton of money real quick. And the reality is you're probably going to lose money real quick if you have that attitude. I would say I'd much rather be making money slowly and build up over time. So I think my biggest mistakes early on were because I was too arrogant, I was too stubborn, and I thought that I was better than the market or anybody else for that matter. You got to put that away. You got to be really humble. You got to know that the market is always right. And if you believe the market is not right, the market will simply kick your ass and make you pay for it later.
Absolutely. So it really comes down to ego. You got to throw the ego, check it out the door, because as you said, the market's always right. You're not going to be. And what I'm getting from you is the kind of the theme that you got to build that consistency. That you're not going for the big win. You're going for those consistent wins over and over and over again. It really does add up over time.
Yeah. One of the things I look at, I used to love baseball, and I could take two separate players. I'll take somebody like a Jose Canseco, right, who was just blasting home runs all the time. And it's like so fun to watch somebody hit a home run, right? When somebody hits a base hit, you don't jump out of your seat and scream unless it's the game-winning base hit. You're just like, oh, wow, a nice hit. When somebody hits a home run, you're like, oh, you're out of your seat. Ah! But that guy, Jose Canseco, struck out more than anybody else. So what helps your team or hurts your team? Is it the guy who hits a home run occasionally and he gets to celebrate by himself? Or is it the Derek Jeter who batted .316 lifetime and gets on base 31% of the time? By getting on base, I now have What's that?
I'm more of a Tony Gwynn fan.
Oh, hey, Tony Gwynn, obviously San Diego Padre, one of the best baseball hitters ever. I mean, I could say Wade Boggs as well, right? He's one of my favorites, but you take either one of those three. Yeah, let's get Derek Jeter out. Damn those Yankees. I'll go to the West Coast and go with Tony Gwynn. I would much rather have that guy get to first base. It's not flashy, but by him getting to first, my probability of now getting someone home and scoring is much greater. And even better, if someone's already on base and I have a guy who's great at getting base hits. And to me, that's what trading's about. It's about manufacturing and grinding out runs, not hitting a home run every now and again. Because if you hit home runs, you're going to strike out all the time. And you know very well, striking out will damage your ego. It hurts you. You feel like a psychological failure. So don't shoot for the home run. Just get base hits and turn them into home runs and turn those into in the park home runs.
Yeah, and it's starting to feel that where you get feeling like a failure becomes a self-perpetuating thing where you just kind of dig the hole deeper, because the more you get that weight on your shoulders that you're not doing well, you try to get that home run and it just becomes worse and worse.
Totally. Yeah, it's so true. It's almost a self-fulfilling prophecy. I remember my mentor early on, there was a day where I was going in what I call the downward spiral, which is every day I'm losing. So I would come onto that trading floor and I was physically walking in with a mindset of, I'm going to lose again today, damn it. And my mind said, oh, you are? Okay, you're going to lose. And one day my mentor walked right towards me and he's like, Merlin, how you doing today? I go, can't wait to see how much money I lose today. I was joking. And he grabs me. He goes, dude, turn around, go home. He goes, what's your stop loss? I go, $500. He goes, give me $500. I'll give it back to you tomorrow. You already lost. He goes, regroup. You can't come in here thinking you're going to lose. You have to think you're always going to win. And if you do lose, you have to evaluate why you lost so that you come in tomorrow and you win.
Yeah. Now, as far as your progression was, we went on the one side where, I said, what were the big pitfalls, but did you have an aha moment that you realized that, yeah, this is really going to work out for me? You made that shift from investor to trader, and you realized that, you need to get those consistency of the wins. Was there anything that just kind of clicked at any point, and was there something that did it for you?
I don't think that there was any one thing that clicked. However, there is something that I would say fundamentally changed the way that I've traded and I think contributed to my success. And that is two things. Number one, having a plan. So it's so cliche to say have a plan, but I love using the analogy or the mantra. If you don't know where you're going, then any path will take you there. And if I tell someone, how do you get from Los Angeles to New York? You're like, oh, you drive there. And it's not that simple, right? You can take Route 66. That's fine. How do you get to Route 66?
Chicago.
Yeah. But like, how do you get there? If I have a well thought out plan that says, hey, I'm taking this freeway to this freeway, this, and I have all those things planned out, I'll get to my destination much faster. So I didn't have a trading plan early on. It was just, I'm here to make money. No, what's your plan? I'm making money. That's all I want to do. Okay, but how? So I started refining my strategy. And again, I have been around hundreds of traders, actually thousands of traders. I would say maybe 100 really good ones. The rest are just, people who talk and don't really walk the walk. But you start to learn what works for you, what doesn't work for you. I mean, even just between you and I, you have your personality traits and you do certain things that aren't going to work for me. And I'm going to do things that in your trading, you're like, that doesn't work for me. Everybody has to accept that and understand we are our own individual human beings. It's like any aspect of our lives. We're unique in things that we do. Find out what works for you. And I found out what works for me. I wrote it down in a trading plan. I've got a document that has all my rules in place, not only the business aspect of it, like how do I run my trading business? Mm-hmm. More importantly, how do I run each specific trade? What am I looking for on every single trade I make? How do I set my entry, my stop loss, my price targets? What are those three things? And how does that impact my portfolio or my positions overall? So I would say that the planning side of it is what drastically changed. I'm no longer walking down the street with two guns going, shooting at everything that moves. I'm not listening to Jim Cramer or Marito Bartiromo. They're telling me what to buy. I'm actually looking, analyzing, planning. If it doesn't look right, I move on. The second piece would be reviewing. I have a list right here that I wrote, and I bring it up all the time. It's my 10 laws of trading. I wrote this back in 1999, actually 2000, right as I went over to Italy. And it's the 10 things that have cost me the most money. So for example, I'll just read one of them. Let's pick a number 1 through 10.
8.
Don't take overnight positions. Now, I got to remember, this is when I was a high-speed day trader. Back in the late 90s, I was averaging 550 trades per day. Number 8 says, don't take overnight positions. Anything can happen after hours. Practice good risk management by not taking home anything. You'll sleep much better. Now, the reason that's on my list is I would take home overnight positions and they'd gap down against me and I'd be losing massively. So if you have something that you do repeatedly that's costing you money, make your own list of 10 things that cost you the most money. I mean, this list right here is over $1 million worth of stupid losses that I could have avoided. Now, I don't make those mistakes because it's written down in my face all the time. Review what you're doing right, what you're doing wrong.
Great. Well, I want to kind of shift gears here a little bit. I got to credit you because you kind of opened my eyes to cryptocurrency. It was something that came along. I mean, it's obviously a lot in the news right now, but you jumped on it very, very early. Let me know about it. Oh, gosh, I don't even remember when, like maybe 2012 or so. It was a long time ago.
14.
First, sorry?
2014.
14. Okay. I knew it was a while ago. Now, we've gone through the boom. We've gone through a bit of a bust. They call it the crypto winter. Where do you see it going from here? I mean, do you see it becoming the boom again? Do you see it just kind of stabilizing at the levels? I know Bitcoin, it's been hovering and trying to creep back up. And
I guess the question is, when you say where's it going, I guess the question would be in what time frame, right? Same thing if I'm looking at a futures chart of crude oil. Where's it going? What, today, tomorrow, this year, the next decade? I mean, I can give you a response.
Okay. Basically, long term, do you see this as a viable asset class that is going to be something that'll be tradable for many people to see income or even wealth? You mentioned you do long term, obviously, in crypto, but do you see us returning to the so-called heyday? Where they started getting all the conferences every year. We got the Miami Bowl down here in South Florida that they unveiled. There was a lot of hype. We went obviously up to 60,000. I mentioned Bitcoin because that's one of the bigger ones, but there are plenty of other better coins and applications out there, obviously. But do you see us returning or even getting to a point where it is considered to be like a legitimate asset class that can be used both for income and for wealth?
Absolutely. They're just 100%. There's not a smidgen of doubt in my mind. So if you look back through the course of history and you think of major innovations in technology, think back to the Wild West, the 1800s, where some guys, let's say he's a farrier, right? And a farrier is the guy that put horseshoes on horses. Mm-hmm. Back in the 1800s, like that guy had booming business, right? There's horses all the time because there were nothing else to get around. And all of a sudden, some guy comes out with these 4 wheels and a sputtering motor, and people are laughing. I'm like, dude, what an idiot. What is this stupid thing, right? The first car was 1865 or something like that. Benz came out with like the first car. Yeah. It looked kind of silly, but I'm sure all the people on their horses in town are going, well, that's dumb. What's that going to do, right? And at the time, everyone said, that's stupid. That's not going to work. That's a failure. Sounds the same thing for crypto right now. Now, if you move forward, let's say 10 years from there, all of a sudden, more people were using cars because you could carry a much heavier payload. You could go, go faster, maybe not as far because the gas would run out. But what happened is the cities started to adopt that technology. The roads became paved, right? They got smoother. Then the roads got wider to accept more vehicles. And all of a sudden, the infrastructure of our Wild West towns accommodated vehicles. And because of that, we developed roads that connected cities. And all of a sudden, it blew up everything because of transportation. I would argue that the dot-com bubble back in 1995, something like 1 million Americans were using the internet back in 1995. It's nobody. And all of a sudden now we're like a 90% utilization rate. Back in 95, most people would say, this is stupid. Who needs to go on here to look up stuff? I've got the library. I've got my Encyclopedia Britannicas. But you fast forward 15 years, everybody would agree. There's nobody who can argue this. It is an indispensable way of life. We could not do what we're doing right now without the internet. So where are we now with regards to crypto and all this? Crypto is simply an innovation of technology. It's a way to distribute monetary means, wealth, money around way faster than traditional banking, right? We have a monopoly in the United States globally run by banks where if they wanted to at any moment, you know this, Brandon, they could send you a message right now saying your assets have been frozen, right? Sure. You have no access to your cash. They can do that. They can devalue your currency. With something like Bitcoin, they can't take it away from you if you have the private keys. So don't keep it on Coinbase. Don't keep it on Kraken. Keep it on a device like this where you keep your private keys. So to me, it's a way to, I guess, a new monetary system allows you to transfer wealth around. But you also have on top of things like Ethereum, Solana, Cardano, Avalanche, Algorand, you're building entire financial ecosystems, decentralized exchanges. And the news that came out over last week was Gary Gensler basically saying staking in the United States has to be cut. Kraken, they paid a $30 million lawsuit, I think it's on Friday, saying, hey, listen, we're going to remove staking from our platform. Stupid mistake, because that's going to push the innovation to decentralized exchanges, right? And decentralized basically means it's not controlled by one person. So you have different platforms out there where I can go and I can basically run my bank outside the United States borders through decentralized marketplaces. It's moving people away from controlled entities to standalone decentralized entities. And to me, there is a huge potential there. I'll give you one technology in particular. We're streaming this show right now. I'm not sure which platform we're using. It's Zoom, but maybe they're paying somebody else for their server space to stream all this stuff. If you use Amazon Web Services, Microsoft Azure, Google Cloud, Vimeo, you're paying a lot of money to stream. But there's a decentralized platform out there called LivePeer. And LivePeer basically says, okay, I'm Merlin. I've got this computer here. And while I do my shows and I do some trading on it, most of the day it sits here not doing anything. I can rent out my high-end graphics card to LivePeer, and people can now use my graphics card to stream their live shows at 1/50th of the cost. So now all these major streaming services are facing competition. Is it utilized now? Very little. But when people realize how much money they can save by using a crowdsourcing computer, they'll start to migrate over to that and utilize that technology. So to me, it's in its infancy. You're talking 5 to 10 years before it really starts to take hold and be utilized in our society. And when that happens, you're looking at much higher prices, much higher prices.
Well, getting back to the coin side, obviously the technology is going to advance. We started off with, the processing time being very, very slow. You can't just walk up to a POS point of sale and just say, here's my crypto, and you buy your product right away, because there's that a little bit of a lag time in the processing. But it's going to change. Obviously, it's getting better and faster every day. We're on the other side. Do you see? You mentioned that we've obviously down here in South Florida, we had FTX and a bunch of other issues going on. It's kind of blowing up that sector rather than advancing it because of some nefarious people and the way they acted. On the other side, do you see that, because government, when they look at that, they get to say, okay, well, look, those people were bad. We need to regulate this more. Do you see that holding us back as well, being the government coming in and especially obviously here in America, kind of interfering with the advancement of that technology?
It is a problem. And honestly, we are one of the stupidest countries with regards to cryptocurrencies. I mean, our political side of things is absolutely ridiculous. This is not a Democrat poke or a Republican poke or independent poke. They're all idiots. I'm sorry. It drives me nuts how colossally inept. One aisle will yell at the other side saying, I hate you. And it's like, well, I hate you. It's like, well, here's an issue we can both agree on. Nope, I hate you. I hate you. Let's make sure that issue never comes to market. So get rid of all of them. They're all idiots. Start from scratch. Anyway, there are some politicians that are very pro-crypto. Gary Gensler's actions last week, idiotic, right? Why didn't you stop companies like FTX or Celsius or Voyager or make them specific requirements that they had to do? You let them commingle funds. E-Trade doesn't do that. Schwab doesn't do that. Goldman Sachs doesn't do that. Chase doesn't do that. You can't commingle funds. It should be a fundamental rule. Yet the SEC is so inept that you guys do whatever you want. But you're going to tell me I can't stake my cryptocurrency. It makes no sense whatsoever. It's like saying, I'm not going to go after the automakers and make sure the car is safe, but I'm going to make sure that you have a driver's license. I guess that does make sense that you have a driver's license. But it's something so simple that's become problematic now. I think that the regulators need to be reined in because they're doing stupid actions that don't protect us from the real damage, which are charlatans like Sam Bankman-Fried and so many other ones out there. There's thousands of them, right? There are more cryptocurrency projects right now than there are publicly traded companies in the United States.
Sure. I think a lot of it's probably that the regulators don't understand the technology, don't understand things, and that may be a bit of an issue as well. Without the proper education, it's fear.
Yes, and it's a threat. Remember, who runs the Fed? Banks. Right? Sure. Banks, the Fed is made up of member banks, right? So if you have a new financial system where people can now control their own money and nobody can say different, that threatens the banks, right? Fractional reserve lending. You deposit your money and the bank lends that money out and makes a lot more money with it. That's exactly what these lending protocols were doing, but they're just not government controlled or insured. There's a spectrum, Brandon, where it's just do nothing, laissez-faire, or heavy-handed like China, shut it down. We can't be on either one of those spectrums because if you're too laissez-faire, people are going to get ripped off and robbed nonstop. I mean, I can create a cryptocurrency in 7 minutes. 7 minutes, I could create one, and another 30 minutes for me to create a liquidity pool. I could have a fully functioning trading cryptocurrency on something like Uniswap or PancakeSwap in about 15, maybe 20 minutes, ready to go. And if I had celebrities, I could pump and dump all I want.
Merlin
Those
coin.
are scams. What's that?
The Merlin coin.
I already have it. The Trader Merlin coin already exists, man. But it would be a shit coin. A shit coin is something that doesn't do anything, like Shiba Inu or Bonk. I mean, these are idiotic, stupid plays that don't do anything.
Right.
So we can't have the heavy-handed shut it down either. And hopefully we'll find some middle ground. All we need to have defined are what are the guardrails for cryptocurrency. And it should be, if you're a cryptocurrency exchange, then you should follow the same rules as an E-Trade, which is an equity exchange, essentially, right? So unfortunately, I don't know why it's taking so long. We still do not know what the definition, brace yourselves, viewers, the government does not know what the definition is of a security. Yet we have the Security and Exchange Commission, the SEC, and they still cannot give the industry a definition of what is a security. I'm going, how does this happen?
Well, I'm
I
not
live by
really surprised
UCI.
because I also know that the IRS doesn't really have a clear definition of what a trader is compared
Yeah.
to an investor. So
It's like,
it's
how does
not
that
really
even
surprising.
happen?
Yeah. No, let's shift gears here real quick before we get going. But on the equity side, the equity markets, we've obviously had a really rough 2022, depending on which side of the market you were on.
Great year for
Right
me.
now, we've been bouncing back and forth. Where do you see us? Do you have a forecast for the next year by chance?
I do a thing every year on my show, which is on the first of the year, I ask all my viewers, give me your forecast of where you think the market's going to go. And honestly, it doesn't matter, right? It doesn't matter what I say. And I hate to have somebody here hang on my every word, like, oh, well, he said this, I'm going to load up or go short.
I mean, I realize that everybody has their own opinion. You take it
Yeah.
for what it
Yeah.
is, an opinion.
So my January forecast, so we have to go back a little bit, was that I think you're going to see a very good Q1, starting to slow down in Q2. And I think by Q3 and Q4, we start to sell off. That said, I think you're going to have a lot of volatility this year. Obviously, we've seen quite a bit of it so far. So I've been right on that aspect at this point. I still think there's a little bit of upside move. I do not think we're breaking the all-time highs this year. I do think we'll ultimately at some point break the lows that we established. But I think you're going to get a lot of chop and remain fairly unchanged on the year. So
you don't think, I mean, we've got a 41-year inverted yield curve. We haven't been that inverted the last 41 years. Do you think that's going to lead to a recession in the US? Do you think we're going to be seeing that? Or
it's actually more inverted. You said it hasn't been this inverted in 40 years. It's actually even worse than that. It's significant. I'll just do something here real quick. Mm-hmm. You don't need to switch screens. I think I can do it all from my control panel over here. I thought I could. Let me bring it up here, and I will switch over to that one. You guys see a chart now?
I got it. Yes.
So here's the yield curve, and most people will say that the yield curve is the 10 and the 2, which is this one here. And I'll go out on a weekly chart just so we can go back historically. That is already more inverted than anything we've seen since 1988. I can't go back further than this on the 10 and the 2. And what's scary here is, it not only is it inverted, and by the way, for those who don't know, anything below this green line here, the 0 line, that means that the 10-year earns you less than the 2-year. It shouldn't be that way. You should earn more for holding something like a 10-year bond versus the 2.
Time, more risk, obviously.
Exactly. Opportunity cost. So that's the 10 and the 1. But Bill Addis, one of my personal favorite bond guys ever, he says it's really the 10 and the 1. And I can't go back that far. I can only go back to 2008. But look how inverted and how long it has been down there. So this is certainly, one of those problems at this moment where you look at it and you say, okay, it's so inverted. Historically, it always leads to recession, maybe depression. However, there's so many other pieces of economic data. You could look at the CPI number, right? You go back a few months, we were at 9.1 on the CPI. Now we're at 6.5. It's expected to drop to 6.2 on Wednesday. So inflation's dropping. Retail sales are dropping as well. There's so many other macroeconomic pieces here. I do agree with you that there's the potential for a lot more pain ahead, which is why I think Q3 and Q4 of this year we'll start to see more pain. However, we've had a pretty good 2023 so far. So we've had our ups. I think we'll traverse sideways for a little bit and then start to sell off near the year end. So I'm not going too heavy on any one position right now. I've actually got right now I'm presently short on the equity markets. I've got 40 puts on the NASDAQ at this moment. I have natural gas long and oil long at this moment. So I'm pretty long
on that gas.
Dude, that's a dangerous place right now too. That's literally juggling chainsaws on I'm a street performer. I'm juggling chainsaws. It's risky as hell to be in natural gas right now. That is nuts.
Yeah, I follow seasonality and whatnot as well. And the seasonal move right now is actually a bit bearish until midsummer.
Yep.
That gas. So hopefully it works out for you. We'll see. But
and here's the thing. We talk about having a plan in place. So it's been fine at this point because I'm selling weekly options against my positions, which if the premium has been great. I mean, you can get 5% premium on Boyle per week. And that's pretty impressive.
The volatility being high, you get more premium, obviously.
Absolutely. So, it's been kind of, at least this week, it's been kind of bouncing sideways. So I'll end up with a 5% premium this week. If it gets above 7, so 7 is my strike price on Boyle at this point. If it gets above 7, my shares disappear, no big deal, and I will have made a great rate of return. If it stays below 7, I'll just sell the $7 strikes again and keep generating income streams from there, lower my dollar cost average. But those are the two big positions. I have a few more other positions, but yeah, I'm short right now. I think that there's going to be a little bit of a pullback here, but that's just my my jaded opinion.
Okay, great. Well, I know we can go on forever, but we're not going to do that. We're going to go ahead and cut it off here. But if people want to follow you and watch you more, you obviously, as you mentioned, Monday through Friday, 2 p.m. Pacific, 5 p.m. Eastern, you do the Trader Merlin show. So they can find you on YouTube, and I'll go ahead and put the link in the text below as well in the description. Anything you'd like to leave us with before you say goodbye for today, for now? I'm sure I'll be back.
Yeah, I'm sure you'll be back. No, I mean, I'm obviously one that loves to trade and I like helping people out at trading. So, if anybody has any questions, you can always contact me through Trader Merlin. But as far as, starting off or having success at trading, if you don't have a trading plan, you should stop right now, grab a piece of paper and just start writing down different ideas, concepts, rules, whether that's your business plan side of it or how you actually want to implement trades individually, specific trades, and start mapping those things out. Because if you are shooting from the hip and trading one thing and then another with different strategies, different rules, you will never be consistent. And anybody who's had longevity in this market, in trading, knows that consistency is king. So have a set of rules, try that set of rules repeatedly over and over and over and over again. Do 100 trades with that same set of rules without modifying anything. And then go back and evaluate those 100 trades and say, what could I have done better? And be objective. Don't think that you're better than anybody. Don't think that you're the greatest. Think that you're the worst and you can always get better. I, for one, will always be learning. And the day I die, that's when I stop.
Absolutely. Well, I want to thank you for spending some time with me. It's been great to have you on here. I've been on your show and it's great to have you back. And I want to welcome you anytime. The door's always open, of course.
Reach out. You know me, I can love to talk. I could have done this for 5-6 hours, but lunchtime's coming up over here. So
all right. Well, you take care. And again, thank you for being here. I appreciate it.
You too. Thanks. Bye, everybody. Have a great day.
Welcome back. I hope you really enjoyed that. I know I did. There was a lot of good information there that I got from Merlin. And again, if you want to go ahead and follow him or watch him, you can follow him at Trader Merlin on his YouTube channel. He's there every single day from 2 p.m. Pacific, which is 5 p.m. Eastern, for about an hour. So I'll go ahead and put the link in the comments down below. And we're going to go ahead and continue now by looking at the sector analysis, as we usually do, for the week of February 20th, and take a look to see what's going on there. It's been interesting. In the last 6 months, you can see that we're almost looking again like a peak in the market. If you know sector rotation, which I've talked about before, basically when you see energy being the leading sector, that's typically a market peak. And it's been interesting. We went through a bullish run for the beginning of 2023 so far. And if you take a look at the last month, January 10th, 2023 to February 10th, 2023, this is looking like a market bottom. You've got leadership in real estate and financials with discretionary consumer services and technology. In the sector rotation, which actually, let me go ahead and show that. Here we are back at the sector rotation model. This is on stockcharts.com. It's free. You can go into that. Basically, what it does, it shows you the sector rotation model in orange and then the economy here in blue. So the stock market typically leads the economy as people speculate to what they think will happen in the economy. So as you can see, when you have financials and real estate performing well or leading the markets, that's usually a market bottom. Then you get technology, consumer discretionary, communication services. That is the market coming off the lows and looking like we're going to have a full-on market bottom and a bull market to follow. So if you take a look at what's been going on here, that past month looks like a market bottom. But don't be fooled. It doesn't look like it's going to sustain itself. Unfortunately, we go a little bit closer here in the past week, and once again, kind of everything started diving once again. And you can see that the energy market is the leader, which normally means market peak, getting ready to turn to the downside again. And looking back at what we saw in the futures markets, it actually kind of implies that we're stuck sideways near the top of the channels that the equity indexes have been in and are likely to pull back now. So looking at the sector ETFs individually, we can break it down a little bit to see where we might want to look for opportunities in the stock market. Well, looking at the XLY consumer discretionary, you saw that we had that nice rally, but it's over. We hit supply. We did have a lot of momentum, so we're in a bit of a correction right now. And it's interesting to see what happens here because this is where the last bullish impulse really began, about 145. So if we bounce, we could potentially see new highs. And the next supply zone really is way up here around 170. However, if that doesn't hold, if we get enough bearish momentum, then we should be able to break down all the way down to about 130. So kind of watch that area this week. It'll be very important. This is daily chart. If we break below the 145 and get bearish momentum going below 40 on the RSI, I see 126, 125 in our future very easily. The communication sector really went wild, gapped up into supply and just collapsed. You can see it couldn't get away from that area fast enough. It really went down quickly. So our momentum died off. We may gather our footing here at this 54.95 area, 55 basically. That's our little bit of demand, our basing before we rallied and gapped up. However, if we break these lows, I don't really see us holding up too well at 52. I see we could push all the way down to 48 pretty quickly. So we'll keep an eye out for that. If we do get that bullish momentum, it's got to come early in the week to be able to propel us higher to new highs. If not, we fail and we go down to the 48 quickly as well. The technology sector is showing a negative divergence. So this is suggesting that it's going to pull back more. We've had a 23% pullback off the last impulse up. You see, we hit supply. We had higher highs in price, but lower highs in momentum. You can't make highs without more momentum. So it's kind of like pulling the supports out of the bridge collapses. So we're in a bit of a pullback right now. We may stall at the 136 area. Ultimately, though, if this becomes very bearish, we could see fresh lows coming in this year. So this is not a sector that looks very well or very good. If we get a close, actually, I probably should have drawn a trend line right here. If we break that trend line and close below it, that's when we could really drop. But if we hold it, maybe it's just a small retracement. And like I was saying, if we bounce early in the week, then we could see some new highs coming up very quickly. Looking at the materials, this is XLB, the material sector. We have pulled back. We basically, sorry, dog's barking a little bit there. Hang on. Okay, sorry about that. Anyway, so on the materials, we bounced off and tried to make some new highs, but you see we hit two targets. Both our impulses, the measured move was hit, and we had a negative divergence, which led to a pullback. Now, this is just a small pullback, and we could bounce again from the same areas as we did before. However, if we see the momentum dipping below 40, then we should break down. And this is a tested demand. That means we could go lower into 70, maybe even below that. So the test will come early again this week. If we can bounce off the 80.5 to 81 area without getting the momentum going, below 40 and going bearish, then we should be able to break out and continue to impulse higher. Energy, well, we had a pullback. We overshot supply. We tested it, bounced, broke it, pulled back. And when we pulled back, we did not go into bearish territory. So we may still see more inflation pressures coming in, and the energy sector looks like it's set to rebound. This is a tested zone. It should not hold on this move up. If we get above 60, we should see some new highs coming this week. So this did hold up and does look like a bullish sector. I think we're going to see outperformance here in the energy sector again. Now, looking at the consumer staples, where'd it go? There it is, consumer staples. Normally, this is the sector that outperforms if the markets are going to become more bearish. We're actually seeing it underperforming right now. So overall, we're seeing the rallies are not going very far. They're definitely not making highs. We're making lower highs and lower lows. So this may continue to push to the downside towards that 69 level. We definitely have a lot of weakness here in the momentum. I don't see anything here that suggests anything else other than continued movement down. We're kind of stair-stepping down. You can almost draw a trend line across those highs to kind of mark the way we're moving. The healthcare sector, really quiet here. You see we had a nice impulse up and a very quiet move down. We do have a positive divergence going on right now where we made a new low, but we made a higher low on the indicator, suggesting that we lost our bearish momentum. I think this is going to lead to sideways movement. I don't see us, even though I put in the impulse measuring up to 144, I don't see us getting there. We had a very weak correction, but I think we're going to have a weak impulse back up. So by the end of the week, I do believe we will be a little bit higher here, but I doubt we'll get above 136. So it looks like we might just creep a little bit to the upside. I would look at other sectors for better performers, to be honest with you. The utility sector usually does not perform well in high interest rate environments anyway. So if the Fed continues to raise interest rates, this should continue to drop. We're in a retracement off the highs. very slowly moving down. It looks like it's going to continue. We've gone below 40 on the RSI, so plenty of bearish momentum. It just looks like it's going to continue to drift lower until we hit 63.84, the demand zone down there. So shorts might be good, but it's going to be very slow for the upside I should say profit side for the shorts. And the financials are taking a little bit of a breather. We had the nice big run up as they were one of the leading sectors for the past, year to date, really, several months. However, we have a negative divergence as we made a new high in price, but we lost a little bit of momentum here. It's slightly higher, but we really should be much higher to tell us that that was going to continue. And it's just not. So with the momentum waning on the financials, it looks as though we'll probably go a bit sideways. I don't really see much more of a pullback going on here. Maybe down at this 35.61, the 38% retracement. But again, I don't see us retracing too deep because overall this has been a bullish sector. And it's interesting. Usually with high interest rates, financials do not do well. However, it's going up. So it's kind of a weird situation right now where they're performing well when they normally would not be performing well. Well, you can't fight the market. The market wants to go up here in the financials, and it looks like it's going to continue to go back to the upside. We should be able to reach this target of 37.50 pretty soon, maybe this week. I don't know. It looks like it might move up slowly, so it might be by next week. But overall, the sector should be somewhat bullish this week. And moving into real estate, our last sector here, it is still very bullish. We had an impulse and corrected down to about 38%. We might flatten out here. I don't see us getting much more bearish, and then we're going to look for new impulse. When we break this high, which is 42.04, we need to break the previous high on the RSI, showing more momentum. If we do, then my target is basically 43.55. However, if when we're coming up to 42.04, we have less momentum than we had before, I would expect a pullback. Again, not change in trend. It's still a bullish trend. It looks like it should continue, but it would continue very slowly. So that's what I'm seeing in those sectors. And we can take a look at some of the trade ideas that I presented to you in the past week or so, kind of follow up on those. And I got a few new ones for this week as well. So let's jump right into that. Let's see. Is this heating oil? That's the wrong one. There we go. Borg Warner. This was a trade idea we had looked at. Unfortunately, it didn't pull back to let us in. It kind of teased us and went close to the entry and took off and hit the targets. Well, it's still very, very bullish. As you can see, we had a little rally-based rally, pullback, and rallied again. If we can pull back, I'm going to be looking for buying opportunities on the pullbacks. We did test daily demand, and that's behind us now. So we're continuing to make new highs, and it looks like it will continue. Problem is, we've got to find good demand to get in, and I'm just not seeing it right now. We just already tested this 46.52, so I won't use that again. Look for new demand to form, and look for entries to the long side. But again, I don't see anything on the chart yet. We just have to be patient. On APP, this was a trade idea we were looking at, and remember, I use the RSI to help filter out trades. I've done a lot of workshops on that. You can look it up on YouTube. When RSI is above 60, supply is a lie. And you can see price came into the shorting area, the supply zone. It looked really good, but we were way above 60 before we even hit the supply. And sure enough, supply was a lie. It looked like it was going to work, started moving down, and blasted through it on earnings. So hopefully you didn't get hurt by that, and that's why I use that as one of my filters for trades. I typically do not short if the RSI is too high. I also won't buy if it's too low. The momentum usually continues. That's why we call them trends. So hopefully you missed the, dodged a bullet on that one. Yum Brands has been kind of tough. This has been testing demand multiple times. As you can see, it stayed in buying range. We were well above 40. It just can't seem to get to the target. It gets so close and stalls out. And if you've got profits in this right now, you probably just need to walk away and take it because we don't have enough momentum to keep going. You see that on the rallies, we're failing to get above 60 and stay there. So that's what's holding us down from getting to the target. So you may just need to walk away with the profit. There still might be a little more upside to it, but it doesn't look like much. There's a lot of selling pressures. We broke out above the highs there. CF Industries. This one was one that we were looking at for a short. Unfortunately, we just came into the entry zone and RSI went above 60. So again, supply is a lie. This happened on Friday, I've been watching this for a couple weeks now. I've been waiting for it to pull back, and we just can't get in. I can't justify the entry when the RSI is too high. It means there's too much buying pressure, and we're likely to continue up, maybe to the next zone. So I'll still watch this, but the only way I can enter when we're above 60 is with a negative divergence on the indicator. So just got to wait and see. CINF, we talked about this one last week, and unfortunately it just kept going, never got us in. I was waiting for a long entry at demand at 105.79. Instead, we rallied up and hit the targets. So great stock, great idea, just couldn't get in. That's the way it goes. SNPS, Synopsis, was also an idea that we came up with last week. This one's pretty close to earnings, so we want to be a little bit careful, but we are pulling back, and the entry was triggered on whatever day that was, Tuesday of last week. Very bullish still, so we should be able to bounce and go to the upside, but you want to be careful in front of earnings. Maybe wait to see what happens with earnings this week and then enter into the trade if you got the opportunity near the demand. As long as the reward risk ratio is good, you still could potentially get into this, maybe even get in above the zone with a 1 ATR stop loss. So use the daily ATR there and put your stop loss that much below. Anyway, some new trade ideas. I have Chubb, CB, and looking back for February 13th through February 18th, for the next 6 days, 86% of the time, that stock goes up over the last 15 years. Not a huge return, but over 0.5%. So there might be an opportunity here in Chubb. So looking at the charts, you can see we're bouncing off some lows, getting some buying opportunity here. If we pull back 208.25 to 211.82 is my entry zone. We got drop, base, and rally demand right there. Putting the stop loss just below, right around 207.95. Target 1, 222.82 with target 2 up here at 237.32. So unfortunately, we were below 40 here on the first test and that move down. We may be below 40 though when we come down. That means that we might have problems breaking a high before we go to our target. We might get a little pullback first. So you have to decide whether it's worth getting in or if it's going to break down, or maybe even wait for the pullback before you enter. It's a personal prerogative, but this does look like it should move up. So even though maybe a little below 40, if we don't have more momentum than we did before, I might still enter along there. PNW, Pinnacle West Capital Corporation, 86% of the time for the last 15 years, this has been bullish as well. So looking for a quick run up for the 13th through the 18th of February as well. And right now on a daily chart, we have tested this demand zone multiple times. That's a bit of a problem. And you can see we also went below 40. So not the best long opportunity, even though seasonally we normally rally a little bit here. So going down to a smaller time frame, actually there might be an opportunity here. We have kind of a drop, base, and rally coming up. I need one more candle to make a high here on the 4-hour chart. If we get another green candle kicking us off on Monday before we pull back, then I might have an entry. And again, you got to watch that RSI. If it's lower than it was before when we come into demand, no trade. However, if we come into the 72.55 and we have the same or more bullish momentum, basically the RSI is higher, then we have the possibility of getting long. And the target is going to be just before the 77.39 there. Schlumberger also looks like an opportunity actually to the bearish side. You take a look at the last 15 years. This one looks pretty good. For about a month here, February 13th through the 15th, 80% of the time for the last 15 years, this has dropped. 80% of the time, and the average return is negative 7.12%. So right now, Schlumberger bounced off of a little demand right here, and we're actually coming into some selling pressure. We have rally, base, base, base. There's your drop. Notice we can't seem to get above 60, so that's the kind of clue right there that there may be some shorting coming up pretty soon. It may get a nice drop out of this area. Another test, by the way, that demand won't likely hold. So what I'm looking at is going down to the 4-hour time frame to reduce a little bit of risk. We have rally, base, drop right there for supply, 56.57, 57.43 with the stop loss about 57.85. And you can see there are actually 3 targets based on the demand zones there. Watch that RSI though, because if we're above 60 when we come into that zone, we may have a little too much bullish momentum to be able to short or at least pull down right away. So what I might have to watch for is a a push down, a retest, and short on the retest. That way we might have enough bearish momentum to actually move down. So I need the RSI to be below 60 for me to short. So keep an eye out for that on the 4-hour time frame. Anyway, that's what I got for you for this week. Hopefully you enjoyed that. And as I said, go Birds. I'm getting ready to watch the game in just a little bit. This video will be out and posted before the game, hopefully. And I will see you again next week. Hopefully I'll be happy. Anyway, keep in touch with me again. You can email me, brandonwendell.cmt@gmail.com. Hit me up on Twitter @TraderBdub. And don't forget to hit like for the video and subscribe, please. That way we can go ahead and continue to bring you great content. We get some new chart school videos coming up. I'm going to be getting those planned and some other stuff for you as well. So I will see you again soon. Trade safe, trade well. Take care, everyone. Thank you for being here.